Last week S&P 500 has gained 2%, and in last 2 weeks S&P 500 has gained 6%. And also until last week there was some confusion whether the S&P 500 will be able to recover or regain its short-term bullish trend or not. However, by Tuesday itself, it was very much clear that the S&P 500 and the entire market has regained its bullish trend. And in my previous S&P 500 weekly technical analysis, I have mentioned that this bullish retrace, this bullish reversal is sustainable. Means we are going to see more bullish movement, but when it reaches to a particular level, then that level and the zone will define whether there will be more bullish movement or not. And surprisingly, on Tuesday itself, S&P 500 cleared that level and the zone and closed above these strong barriers. Now, next week will be very crucial, very crucial. Why it will be very crucial? Because next week it will be known whether the market, including the S&P 500, Nasdaq, Dow Jones, the entire market, whether the market will move up further or the market will re-enter to the bearish trend. Why and how that is going to happen? So there are many technical as well as non-technical reasons. Technical reasons include that the S&P 500 is now heading to its expected peak. This expected peak was supposed to come into the picture in the month of December when the all-time high of 6,100 was seen. However, because of this, the fall, we have seen that it took more than a month, and now finally S&P 500 has moved up. But the peak, it never tested the peak, and because of this reason, the peak is going to weigh heavily on the S&P 500, and the same will be reflected in the Dow Jones and the Nasdaq. Now, other than the peak, there is the saturation in the bullish side, absolute saturation in the bullish side. And in my pre-market analysis yesterday on January 24th to my Patreon community members, I mentioned that the market, the Dow Jones and the S&P 500 has hit the saturation, and yesterday on Friday these indices are expected to hit the absolute saturation, K equal to D equal to 100 of the stochastic RSI. And because of this saturation, the market, the entire market, including the Dow Jones, S&P 500, Nasdaq, is ready to see a pullback anytime starting today. And the market will cool down only when there comes one red candle. So yesterday we have seen a red candle in the market because of the absolute saturation in the entire market. Okay, it has fulfilled that the condition. However, if the S&P 500 keeps on moving up, in that case in next 2 to 3 days it will hit the absolute saturation once again. So the expected peak, the absolute saturation. So these two factors, yes, one more factor that will come into the picture, and that will be the overbought condition. So 1, 2 and 3 technical factors will be there. Now, how the S&P 500 and the entire market can overcome this particular thing? So for that we need to wait until Wednesday. Wednesday on 29th of January, the FOMC decision will be released, and all of this will make the market heavily volatile. And through the FOMC, outcome of the FOMC press conference of the Fed chairman, if everything goes in favor of the stock market, and by that time if the S&P 500 is seen around this the expected peak, in that case what will happen? In that case S&P 500 will be in a condition to clear this strong barrier, this strong hurdle, and then it will enter into 62XX by the end of this week, or by the early next week. So whatever is going to happen or whatever will happen, I will discuss here in detail in this S&P 500 weekly technical analysis. So guys, subscribe to my YouTube channel if you have not yet subscribed. And if you are looking for these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. But guys, before that, let me remind you, all of these three sections are interrelated, are interconnected. This is why when I say the probable movement, then I cover 30 to 40% of the probable movement in the first and the second point of the agenda, because I discuss the weekly chart, the daily chart, the candles on the weekly chart, the candles on the daily chart, the patterns, etc., etc., and all of these things. This is why 30 to 40% of the probable movement is discussed in these two, and then rest 60 to 70% of the probable movement in the last point of the agenda. This is why it is highly recommended that you should watch all of these three sections in order to understand what is going to happen in the market, in the entire market in the next week. So the first point of the agenda is the S&P 500 technical analysis on the weekly chart. Now, because of this 6% gain, 6% gain in 2 weeks, there are two heavy bullish candles. And because of these two heavy bullish candles, the technicals, except the MACD is still trading bearish. All of the technicals have aligned bullish. Okay, and this is now supporting the continuation of the bullish trend. So S&P 500 is trading in the bullish trend for more than 1 year, and recently it has entered into the neutral trend, okay, for a week, and then it managed to recover its bullish trend. Okay, now this is also the condition generally which results or which ends in the trap, a bull trap. Okay, so I have discussed some of this part in the previous S&P 500 weekly technical analysis, and I will again discuss this, the trap, the expected bullish trap, okay, in this technical analysis also. So weekly chart is now heavily bullish. Okay, MACD is only, the MACD is bearish, otherwise it looks good, and it is supporting more bullish movement. More bullish movement to what? To the expected peak of the S&P 500. Anyways, the second point of the agenda is the S&P 500 technical analysis on the daily chart. Now, daily chart, you can clearly see that it has regained its bullish trend. Okay, and is expected to get this absolute bullishness as early as on Monday. Okay, then it will be 100% absolute bullish on the daily chart. Now this absolute bullishness, okay, and the support through the weekly chart indicates that market has potential to move up further towards its expected peak and can sustain or can try to sustain at or around the peak by Wednesday. Okay, when the press conference will be there and also the decision will be released. And also at the same time, any fall is expected to be limited because of this, the heavy bullishness, absolute bullishness. Third and the last point of the agenda is the probable movement of the SP500 from January 27th, which is Monday, through January 31st, that will be Friday. Now, what we know is that Monday and Tuesday are blank. Blank means that the current bullish movement is expected to continue. Market is not expected to show heavy deviations. So we are expecting normal movement on Monday and Tuesday, mostly the bullish movement, and any fall will be limited. Now comes Wednesday, Thursday and Friday. These 3 days will be heavily volatile because on Wednesday, FOMC event, the mega event is there. And Wednesday after market hours, Microsoft will release the earnings. Its impact will be seen on Thursday. On Thursday after market hours, Apple will release the earnings. Its impact will be seen on Friday. So this is why Wednesday, Thursday, Friday will be heavily volatile, and you can expect sharp fall or sharp rise in the market, especially in the S&P 500 and Nasdaq. Okay, not much in the Dow Jones. Whatever Dow Jones has to show, okay, these are moves. Mostly these moves will be seen on Wednesday. So I will discuss all of this, okay, as per the agenda. First I will discuss the weekly chart section, then the daily chart section in detail along with the patterns, movement, everything, candles, and finally the probable movement. Okay, so guys, before I discuss the weekly chart in detail and show you the technicals, everything, let me add a disclaimer to this technical analysis. Through this S&P 500 technical analysis, I will give you the probable movement of the market, what is expected to happen based on the technicals, the numbers, and the events. However, I do not give any explicit trade setup that buy at this level or sell at this level. No. And because I do not know your trading style or what you are trading into or your trading experience, etc., etc., that is why whether you are making 20 to 50% or 100% profits within a day or within a week, or you are seeing 10-20% losses within a day or within a week, all of these profit and losses will be all yours. Now guys, this is the weekly chart of the S&P 500, and here I will do the technical analysis and will tell you that what the weekly chart is indicating and how the market, the S&P 500 and the Dow Jones, etc., are expected to move in the next week, especially through the weekly chart. So on this the weekly chart, first comes the candle. It's a good, not good, it's a heavy bullish candle. It's a heavy bullish candle. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the S&P 500, Dow Jones, and for the entire market every day from Monday through Friday, every day, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now that it's a heavy bullish candle, and also you must note the closing of the candle is 6101, and this is very important, very significant, because number one, this closing is above the previous all-time high, that was 6100. Okay, now the closing is 6101. Previous all-time high was 6100, and also 6100 was my calculated resistance level, which I have already disclosed in the month of November when it was trying to move up. And it was expected in the month of November itself that whenever it reaches to 6100, it is expected to fail, and it failed. Okay, but now that the closing is seen above this 6100, okay, which was the strong level, okay, at 6101, this has now opened more bullish side movement, and also because the body of the candle is very heavy, so all of these factors indicate, see, a gap up open is not confirmed, no, but all of these factors indicate that irrespective of any open and initial bullish movement or intraday bullish movement on Monday will be seen. Okay, and this is expected to be extended to Tuesday also, Monday and Tuesday. Okay, because in terms of data also Monday and Tuesday are blank. Okay, this is there through this the weekly candle of the last weekly candle of the S&P 500. Now let's verify whether that will actually happen or not. This is the Dow Jones. Okay, so the purpose of analyzing the Dow Jones is just to verify that whatever I'm predicting or whatever is expected to happen in the S&P 500, it will happen 100% or not. Okay, so once the Dow Jones justifies, then 100% that will happen. This is the Dow Jones. Okay, last weekly candle of the Dow Jones. It is much heavier. It is much heavier as compared to the last weekly candle of the S&P 500. And if you notice, the Dow Jones has gained more than, so from the previous close to the high of the week, around 2.5%. Dow Jones has gained more than S&P 500 even on the closing basis, and also the body of the Dow Jones is much heavier as compared to the body of the S&P 500. Dow Jones is indicating a gap up open on Monday, or irrespective of any open and initial or intraday bullish movement on Monday, and it is expected to be extended until Tuesday, Monday and Tuesday. Okay, so now one thing is clear, that on Monday, irrespective of anything, there will be an initial or intraday bullish movement. Now let's analyze the technical indicators. In terms of the technicals, clear fan out in the moving average is bullish. Okay, Bollinger Bands bullish on the weekly chart, Ichimoku cloud bullish on the weekly chart, this the heavy divergence which was there in the S&P, the MACD of the S&P 500, okay, which has actually triggered this the heavy bullish retrace, okay, and exactly the same I mentioned in this week technical analysis, that we are expecting a heavy retrace because of the heavy divergence. Divergence has somewhat decreased or declined, but it is still bearish, okay. Still there is some divergence, okay. I will not say that it has declined out, the divergence has declined and is coming into the line, not yet, okay. This further opens bullish movement or chances of the bullish movement for one more week. See, the chances of the bullish movement in this week were heavy, okay. In this week were extremely heavy or absolute, that bullish movement, okay, will be there. In this week the chances were good, heavy, that because the divergence is still heavy, so we can expect, a green candle, okay, by the end of the Friday, okay, fine. And still looking into the divergence in the Dow Jones, okay, there are chances that the next week candle can also be seen as a green candle. But because in the next week, Wednesday onwards, okay, the FOMC, the event, then Microsoft, Apple, okay, the events will influence the movement. That is why just like previous week and last week, these 2 weeks, it cannot be confirmed that we will see by the end of the next week, means January 31st Friday, we will see a green candle or not, okay. It will be highly subjective to what happens on Wednesday, Thursday, Friday, especially on Wednesday. Wednesday will define that what is expected to happen, not just on Thursday, Friday, but for the coming weeks, okay. Stochastic RSI is clearly bullish. All of the technical indicators are looks good, looks bullish. All of this indicates that S&P 500 is 80% bullish on the weekly chart. This means that the bullish trend is there on the or through the weekly chart. Now comes the Dow Jones. Okay, so let's verify that whatever is happening or whatever is expected to happen in the S&P 500 will actually happen or not. Same thing, okay, clear fan out in the moving average is bullish, Bollinger Bands bullish, Ichimoku cloud bullish, okay, everything looks good. Now here you will notice that the MACD, the kind of divergence we have seen in the S&P 500 is now not seen, okay, anymore in the in case of the MACD of the Dow Jones. Okay, MACD of the Dow Jones is is now normal. It looks normal. Okay, so this means that this MACD of the Dow Jones is not supporting, okay, any absolute or any good, bullish movement or the candle or so. No, the stochastic RSI is bullish. Okay, so now through the technicals, it is clear that the Dow Jones is also in the same state. It is 80% bullish on the weekly chart, and also the trend is still bullish. There is no change in the trend. At this point of time, there was the little change, the neutral, but now it has regained and is bullish. So again, what all of this indicates? All of this indicates that Monday and Tuesday, there is no problem. The entire market can sustain bullish, can even try to move bullish, and the S&P 500 breached its all-time high, and now the Dow Jones can try to breach its all-time high, but only until Tuesday or in the first half Wednesday before the FOMC decision is known. After the first half, after 2 p.m. Eastern time on Wednesday, everything will then be influenced by the decision and the press conference. But whatever is going to happen or whatever will happen, I will keep you posted through these daily precise updates of the S&P 500 and the Dow Jones every day from Monday through Friday. And if you have not yet joined my Patreon community, then I have given the link in the description of the video and also in the comment section. So now guys, before I discuss the daily chart, I have this important information to share with you, that these are the programs, okay, that I offer, and through these programs I teach the hacks. These are the premium hacks, the hidden hacks, which you might not have seen or heard of. And these hacks works almost 100% of the times with almost 100% accuracy. That is why I have mentioned unmatched accuracy 98%. Okay, although it works almost 100% of the times with almost 100% accuracy. So this is 2 stock market hacks, this is 4 stock market hacks, this is 6 hacks plus modified technical indicators. So I have modified my technical indicators in order to get an early indication of the trend change or whatever is expected to happen, and generally that happens because my technical indicators give me an early indication of that change. So I will share those technical indicators, the values, and I will help you set up your charts, and also I will give you the hacks, okay, in this program. And exactly there, and exactly the same is here in this program, and here you will get 8 hacks, okay, 8 hacks plus modified technicals. Now this is options trading strategies, premium calculator. Okay, so if you want to learn the options, okay, and generally you have seen that very like on the this day, particularly the 0 DTE, the expiry day, we have seen 100%, 200%, 500%, 1000%, and I myself have shown you 5000% in the options, especially on the 0 DTE when there comes exceptionally heavy movement. Okay, so options are risky, but at the same time, okay, gives exceptional, unthinkable, unimaginable returns. Okay, if you want to learn the options, okay, from basics to advanced, the trading strategies and the premium calculator, then this is 8 stock market hacks plus modified technical indicators plus options, trading strategies, premium calculator. Everything is in this particular program. So this particular program covers whatever I'm going to discuss in rest of these programs. So in simple words, if you want to make like 5, 10%, 15% or so, okay, then these programs will fulfill your requirement. So guys, if you are interested, then you can open these programs and you can learn more about what I'm going to cover and how that will be covered. And these programs are delivered one-on-one basis only. So guys, whenever you want to participate in these programs, then I have given the link in the description of the video and also in the comment section. You can follow that link and then you will see my Patreon profile, my Patreon page, and here you will see the shop section. And in the shop section, you will find all of the programs listed. Now guys, I'm going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. Now here I will do the technical analysis on the daily chart. This is the daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. One candle means one day. Okay. Now let's first discuss the candle. If you notice, it's a red candle. Okay. However, this red candle is not a strong red candle or is not a strong bearish candle, because the closing of the candle is still above the open of the previous candle. Okay, and also intraday, if you notice, it has given only 0.6567% movement from top to bottom. And S&P 500, compared to this, the candle S&P 500 has lost only minus 0.30%. Okay, so overall it's a normal simple bearish candle which is not signifying any heavy bearish movement and also not signifying any gap down open, because other than being a normal bearish candle, the closing was above 6101, whereas the all-time high was 6100. So closing of the candle was above 6101. That is why this candle may look red. This candle does not have the absolute or the heavy bearish characteristics. So yes, so in simple words, this candle will be seen as neutral. And because it is neutral, that is why it will support the current trend. The current trend is bullish on the daily basis, on the daily chart. Now let's confirm the same through the Dow Jones. This is the Dow Jones. Again, a very small bearish candle. Okay, open and closing of the candles are inside the previous heavy green candle. So this candle is simply not absolute bearish. Okay, there are no bearish characteristics. Okay, it is again simply a neutral candle. And one more thing, guys, you must understand that bearish candle formed because of the absolute saturation in the Dow Jones and the S&P 500. So this bearish candle in the Dow Jones and this bearish candle in the S&P 500 was just to fulfill the conditions arise through the absolute saturation. And now because there is a red candle, okay, a bearish candle, So that the absolute saturation is now out of the picture, and for next, at least for next 2 days, okay, market is expected to sustain and is allowed to move up further. There will not be any problem as such. And all of this the heavy bullishness was a result of what happened on Tuesday. Okay, so you can see that what happened on Tuesday actually brought this the absolute or this the heavy bullishness. Because in my final update on January 21st on Tuesday, I mentioned that if the Dow Jones closes in the open equal to low condition, wherein it never breaches its open price and also closes above this my strong resistance level. So open equal to low condition is just one thing. But if it closes above my heavy resistance level, which was now then acting as support, then it will allow either a gap up open or irrespective of any open and initial or intraday bullish movement tomorrow, the next day. The next day means January 22nd. So on January 22nd, we have seen a heavy gap up open. Okay, and after this, the heavy gap up open, it sustained and it moved up and it breached the previous ATH. So it was actually the Tuesday that has triggered this the heavy bullishness. So guys, if you also want to get these daily precise updates of the S&P 500, the Dow Jones, and for the entire market every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And also guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like, and I will consider this like as an appreciation. Let's first cover the S&P 500. In terms of the technicals, clear fan out in the moving averages. S&P 500 is bullish through the moving averages. And also there was a confirmed crossover in the moving averages on Wednesday. Okay, so this has further helped the Dow Jones to breach this the heavy resistance zone. Okay, so moving averages is bullish, Bollinger Bands is bullish, Ichimoku cloud is bullish, and now comes the MACD. MACD is, you can clearly see that the MACD is bullish. And yes, MACD, if it continue to move up, then what will happen? In that case, this heavy divergence will be seen in the MACD. This heavy divergence will then compel the S&P 500 to give a reversal, to give a minimum of 2 consecutive red candles on the daily basis. Okay, stochastic RSI is absolute bullish. Okay, but is not saturated because yesterday it has already given a red candle. So all of this clearly indicates that the S&P 500 on the daily chart is 100% absolute bullish. Absolute bullish. Okay, Dow Jones is also same. Okay, there was a confirmed crossover in the moving averages. Clear fan out is there above the Ichimoku cloud, Bollinger Bands, and it was the bullish crossover in the MACD was seen even before it was seen in the S&P 500. Okay, here in the Dow Jones. So you can see MACD is bullish, stochastic RSI is bullish. All of this indicates that the Dow Jones is also 100% absolute bullish on the daily chart. So now once again, what does this mean, the 100% absolute bullishness? Okay, and how that is going to work? Does this mean, or does that mean that every day we will see back to back bullish candles, bullish closing? No, not at all. So it doesn't work like that. Okay, what actually happens is that when I say the 100% bullish, this means that now we will see more bullish side movement, more. Okay, limited bearish side movement. Even if there comes a bearish side movement, then also market will be in a condition to recover and to regain, and is expected to continue its bullish trend. As simple as that. This is what it means, 100% bullish movement. Now one more thing you must understand. Okay, that on the weekly chart we have seen that Dow Jones and S&P 500 were 80% bullish. On the daily chart it is 100% bullish. Okay, and also we are expecting a gap up open, or irrespective of any open and initial bullish or intraday bullish movement on Monday. But because of all of these factors, and because nothing is special is planned for Monday and Tuesday in terms of earnings or data, so Monday and Tuesday we can expect market to either to sustain or to trade bullish or whatever bearish movement will be there, it will be limited. But whatever will happen, I will keep you posted through these daily precise updates of the S&P 500. And guys, if you think that I give only these the precise updates of the S&P 500, Dow Jones every day from Monday through Friday, like pre-market update before the open of the stock market, midday update after 3 hours when the market comes into the session, final update before the closing of the stock market, 2 hours before the closing of the stock market, then no. This is one part that I gave these updates, the precise updates every day from Monday through Friday in this manner. But I also give the midweek update, means the video technical analysis. So other than this, the midweek update, I also gave the stock market opportunities, minimum 5 to 10 every week in the premium stocks of the US stock market. And guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here you will notice 3 levels or 3 tiers. This is all midweek update videos. Okay. So I've post this the video analysis, okay, generally every Wednesday. Okay, and I discuss the levels, zones, movement, okay, and everything in very detail. Then this is the daily S&P 500 updates. Okay, these two. The only difference is the geographical location. Okay, so when you subscribe to either of these two, then you will be getting all midweek update videos. Means whatever you are going to get in this level, in this tier, you will get in these 2 tiers. Other than this, you will get the daily SP500 analysis, updates, movement, levels, zones, and everything in detail every day. And also the stock market opportunities, minimum 5 to 10 every week. Guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, year, and they are getting these daily precise updates, pre-market update, midday update, final update, and the special updates on FOMC, and the stock market opportunities, and the midweek update. And they are very well aware of the movement and everything even before it is seen. They know that what is going to happen, how that is going to happen, what will be the support and resistance levels, and everything. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community, and you are welcome. Now guys, I am going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement, means what is going to happen in the S&P 500, Dow Jones, and in a manner to the entire market in the next week, means from January 27th, which is Monday, through January 31st, that will be Friday. Now guys, again let me remind you that if you have skipped the weekly chart section and the daily chart section, then you should watch those 2 sections, because I discussed, okay, the pattern and also why still the bullish trap is there in the picture, and why we are still expecting a sudden fall, why there may come a sudden fall. Okay, and also what the candles are signifying, why there will be, a bullish movement, gap up, open, okay, or the neutral pattern, etc, etc. So now the events for the next week: Monday and Tuesday blank, almost blank. This means that the movement and the 100% bullishness or whatever was there, it is expected to continue. Now comes Wednesday, then comes Thursday, Friday. Wednesday 2 p.m. Eastern time, the decision, the FOMC decision will be released. 2:30 p.m. Eastern time, press conference of the Federal Reserve Chairman. Okay, Wednesday will be heavily volatile. A heavy bullish or bearish movement is expected on Wednesday. Okay, not after this the note will be released, but when the press conference will be held, that time. Thursday, Wednesday after market hours, Microsoft will release the earnings. Okay, and its impact will be seen on Thursday. And because the influence of the FOMC decision and the press conference, okay, seen on the subsequent days, okay, until Friday, So the influence of this the FOMC decision and the press conference will be felt on Thursday, and also the earnings of the Microsoft and guidance of the Microsoft will be felt, okay, on Thursday. So this makes Thursday more volatile. Okay, now comes the Apple. Thursday evening, Thursday after market hours, Apple will release the earnings. Okay, and its impact will be seen on Friday. By the end of Friday, we will say that almost all of the giants have posted the earnings. Okay, but in the next week, Amazon, okay, Meta, and Google will post the earnings, okay, early next week, and then the earnings season will be virtually, it will be over. So this is clear. Now comes the numbers, movements, and the technicals. But guys, before that, hit like if you have liked this video so far, and I will consider this like as an appreciation. And other than that, if you have not yet subscribed to my YouTube channel, please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire market, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now, what we know is that S&P 500 closed at 6101. 6101. The previous all-time high was 6100. And on Thursday and Friday, these are the two consecutive closings above 6100. And also S&P 500 is 100% absolute bullish on the daily chart. It is 80% bullish on the weekly chart. Okay, so all of this indicates bullishness, bullish sentiments. Okay, everything which is bullish, no bearish, nothing bearish. Okay, what does this mean? This means that on Monday also, irrespective of any open, we will anticipate, or we are anticipating, a bullish movement, an initial bullish movement or intraday bullish movement we are expecting on Monday. Okay, now comes the expected peak in the S&P 500. This peak was supposed to come into the picture, okay, when the S&P 500 was moving up by the end of November or the first week of December. Okay, that time it was supposed to hit and then a failure and then to enter into the correction. However, the market movers were clever. They knew that what can happen, or the impact. So before it could have hit the peak, okay, it has lost, and then we have seen bearish movement. It opened the opportunity to re-enter into the market, okay, and all of this means that any bullish movement in the S&P 500 will be limited to the peak. Okay, this peak is basically a little zone. Okay, it is actually a number, but the number lies in the zone. This zone is created by the two calculated levels. These my calculated resistance levels, but this is the expected one level. Okay, this is not the calculated resistance or support level. This is calculated, or this was calculated through some other method. Okay, and it lies between these two. That is why a zone, a heavy zone, a little zone, a heavy zone is there. This zone starts from 614x. So when the S&P 500 starts to move to or towards and hits and enters into the zone, from that movement onwards, if it happens by Monday, okay, then by Tuesday it will not be able to clear the zone. No, because so far, because the volatility, the power it needs, the S&P 500 needs power to breach the zone. The power will not be present until Wednesday. Okay, this means that any bullish movement will be limited to the zone, okay, until Tuesday end of the day or first half on Wednesday. It will not be able to move beyond the zone. It can enter into 614x, it can breach a little, okay, but the upper section of the zone, okay, and then this the level, absolute level, okay, this will keep pressure on the market, pressure on the S&P 500, and will not allow the S&P 500 to move up any further. Okay, and we will see that it is struggling again and again. Okay, and then it will remain below the zone, either inside the zone, at the zone, below the zone. But more bullish movement, okay, is not expected because of the presence of the zone. Now, when the FOMC decision is released, okay, that will be the first time or first instance, okay, 2 p.m. Eastern time on Wednesday, when the FOMC decision is released. And if there comes something favorable, in that case we can see, or we can expect, that S&P 500 will try to breach the zone. But it might, however, there is no guarantee that it will be able to breach the zone. The actual power it will be getting through the press conference of the Federal Reserve Chairman. Only if the Federal Reserve Chairman goes dovish, okay, dovish comments and dovish everything, okay, and market gains momentum, okay, and at the same time, the Dow Jones, okay, is seen somewhere around its expected high, okay, and its all-time high was 074 45074 was its all-time high, and the Dow Jones is seen around, and the Dow Jones breach, I'm not saying closing also, I'm saying a breach of 45,074. Okay, it happens when the S&P 500 is struggling to clear the zone. Okay, so it breaches 45,074, and the Federal Reserve Chairman goes dovish. Okay, S&P 500 is struggling. When all of these factors are seen, okay, or these factors or these things falls in a line at the same time, then there will be a heavy bullish momentum, not movement, no, momentum. Then there will be a heavy bullish momentum. Through this bullish momentum only, market will be having potential. The S&P 500 will be having potential to breach the zone. And on Wednesday, it is a compulsion. It is a compulsion for the S&P 500 to clear the zone. This is the expected peak. This is the first peak. Okay, because if by Wednesday, if the S&P 500 fails to clear, even after this the comments, okay, and whatever is happening in the Dow Jones, in that case there will be around 80% chances, 80 to 90% chances that S&P 500 will not be able to move up anymore, will remain, or whatever high it will make, okay, here at this the zone will be the all-time high, and then it will have to come down. Okay, and in that case this peak will come into the picture, and the peak generally, okay, whenever this kind of peak comes into the picture, then it demands a minimum of, or generally on an average, 10% fall. Okay, 10% fall, then this means that 5,500, okay, somewhere around 5,500 or 5,600 will be back. Okay, it will be back into the picture. Okay, now let's talk a little more positive, that if everything goes as per plan, okay, or if everything goes in favor of the bulls, and because of the dovish comments of the Fed chairman, heavy bullish movement in the Dow Jones breaches its all-time high. Okay, everything is bullish and everything is favorable, and the S&P 500 is able to breach. And see, breaching is very important. Breach is very important. Okay, when the breach happens, then there will be some chances, then it will indicate something positive, okay, that the market is now showing positive signs, that it is not expected to fail, okay, at this the expected, this the current peak, or this the zone, it want to move up. Okay, and on Wednesday it closes above the zone, and closes above the expected level, the peak. Okay, closes above. In that case, what will happen? In that case, the next peak, that is somewhere in 62xx. Okay, so then that peak will come into the picture, and then this means that market is allowed to move up to this peak. Now, these are the only two peaks as of now. These two peaks are known for the market. So this means that either from here or from here, S&P 500 will have to lose, and will have to enter into the bearish trend, and will have to give up 10% to 20%. Okay, so this is in the bull side. Yes, you might be thinking, or you might want to ask this one question, that okay, fine, if the Fed chairman goes dovish, okay, everything remains bullish, but still the S&P 500 fails to clear this expected peak, or this the zone, then on the same day Microsoft will release the earnings after market hours. If the earnings comes in favor of the stock market, the Wall Street, then will the S&P 500 be able to clear? Yes, on Thursday also S&P 500 will remain heavily volatile, because the impact of the FOMC and the press conference will be felt on Thursday, and also the impact of the Microsoft earnings of Microsoft. So if it fails to clear and sustain above this the zone and this the peak on Wednesday, okay, but it closes in between the zone and 6,100, it must close in between these two. Okay, then on Thursday, okay, it will get one more chance to hit and clear and to fulfill this condition, and so okay. Friday, no, although Thursday after market hours Apple will release the earnings, but by Friday the impact of the FOMC, okay, decision, and this will be out of the picture. Microsoft earnings will already be realized on Thursday, so Friday will not be having that much power. Whatever will happen, or whatever has to happen, must happen on Wednesday and Thursday. That's it. Okay, so I mean this the breach and close above the zone, it must happen by Wednesday or Thursday, otherwise there are no chances, and then from this peak itself, okay, the market will have to give up. This time when it gives up, then be ready, most likely it will fulfill its historical movement, which is on an average around 10%, sometimes it is 15%, okay, but 8 to 10%, not 8%, but on an average 10% is the fall. Bullish side is clear. One more thing that you must understand. Recently, we have seen that the S&P 500 has given two closings above its previous all-time high. Okay, so this makes it more bullish, and also through the technicals, it is 100% bullish. Fine. The same condition must be seen in the Dow Jones. So if the Dow Jones try to move up, for now, it has to around 1.5%. Dow Jones has to gain 1.5% in order to hit its all-time high. Okay, so if the Dow Jones is able to gain this much percent, okay, by Tuesday end of the day, or by first half Wednesday, then it will keep this theory alive that the S&P 500 can again and again try and struggle and try to breach the zone. Okay, however, if Dow Jones fails and Dow Jones never hits its all-time high, then S&P 500 will not get this support, because you need to understand the relationship between the Dow Jones and the other indices, the S&P 500 and the Russell 2000 and the Nasdaq. Okay, for example, on January 21st, in the final update I mentioned, if the Dow Jones closes in this condition, then the next day on January 22nd, there will be a gap up, open, or irrespective of any open, and initial or intraday bullish movement. So on Wednesday, there was a gap up open in the Dow Jones, no doubt. But on Wednesday, there was a heavy gap up open in the S&P 500, although the conditions of the S&P 500 were not favorable for a heavy gap up open. But it was actually the Dow Jones that has helped the S&P 500 in this case. Okay, so if the Dow Jones has the power, or the Dow Jones supports, then S&P 500 has the potential, okay, to clear the struggle, to clear the hurdles. But if the Dow Jones itself becomes weak, in that case S&P 500 will lose the power. Even if the S&P 500 has the momentum, it will lose the momentum. Okay, so that is why it is also a compulsion that in order to see that the S&P 500 can breach or can sustain above that the zone, the peak, which we are expecting in this peak, okay, the Dow Jones must be supportive. Okay, without the help of the Dow Jones, it is not possible as such. So yes, so in this manner, what you can say, or what you can see, is that for more bullish movement to happen, or for continuous bullish movement to happen, the Dow Jones must clear sustain and close above 45,074 mark, just like S&P 500. When Dow Jones is seen in this condition, okay, two consecutive closing just like this, then more bullish movement in the entire market. Okay, not just the S&P 500 but in the entire market. Okay, bullish movement is clear. Okay, for now up to the zone only. Okay, Wednesday it will be very much clear. And if you are my Patreon community member, okay, then on Wednesday I will give you frequent updates. Okay, once it is released, once the note is released, and then during the press conference I will give you the frequent updates. And if you are not, then you can join my Patreon community, and I've given the link in the description of the video and also in the comment section. Now comes the bearish movement. Now it is very simple. Okay, that when this the bearish movement will happen, or when it is expected to happen, the bearish movement. For this the bearish movement to happen, S&P 500 has to close below 6,100. Okay, number one point, it must close below 6,100 so that it open the bearish side. Okay, however, just below the 6,100 in 608x, there comes one more support. Okay, historically that this level has acted as strong support as well as resistance. So once it closes below 6,100, then it will open the possibility of seeing the more fall or more bearish side movement. But when it loses 6,100 and also loses 608x, okay, in that case, yes, in that case it will be coming down. It will be coming down to what? In that case, the standard and the heavy resistance which was there, which is now acting as support, that is 604x. Okay, because in that case it will have to fulfill its obligation to 604x. Okay, now when it comes down to 604x and it sustains, closes above 604x, fine, not a problem. Not a problem, because from 604x it can recover. Okay, it can put some efforts and it can recover 6,100, fairly possible. Okay, it might take 1 or 2 days, but it's possible. The more problem will happen, or the major problem will happen when it loses 604x strong support, because when it loses 604x the strong support, then it will again come into the condition of the rejection, okay, or a failure, and then we will see more fall. Now see, this is more likely to happen when it moves up, struggles at the zone, okay, fails at the zone, comes down, then it will lose, okay, these supports in this manner, then it will try to sustain at 604x for 1 to 2 days, okay, but eventually it will fail, and then it will become more bearish. Okay, and then it will enter into 59xx, and when it loses 6,000 mark and enters into 59xx, okay, especially when a rejection is seen from here, from this the expected high, then we should be ready for 10%. Okay, 10% means 5,500 in simple words. Okay, so we will see in the coming days. It might take a couple of days, for 2 weeks or 3 weeks, okay, to come down. There will be slow movement and intermittent. It will try to retrace, but then again fail, retrace, fail, and failure, and then it will be coming down. Okay, in this manner. So this means that in the bearish side, 604x, whatever happens, it must not lose 604x. That will be really bad, because that can actually trigger, okay, this more fall. In case of the Dow Jones, again the same zone that I've discussed, this particular zone that I've discussed in my midweek update technical analysis to my Patreon community member, this particular zone. If or when the Dow Jones loses this particular zone, okay, and at the same time if the S&P 500 also loses 604x, in that case more fall, no doubt, then there will be more fall. And this fall from here is expected to be around 2%. Okay, because the next heavy support, okay, comes at the Ichimoku cloud, and also just above the Ichimoku cloud is my heavy support level. Okay, so this will be acting as cushion. So it will be now very much clear on Wednesday itself, okay, what is expected to happen, and then accordingly we can see, okay, 6-1, it will see the zone. This is the zone. It starts from 614x. Okay, and then it spends to a couple of points, okay, from 604x to the other level, okay, and then comes the intermediate level, okay. And this, the 604x, it is not the zone, okay. Last week also I've cleared that this 604x is not a zone. It is just one number, only single number. It is not a zone, just one level. It's just one level, okay. But here this 614x and this the above, so it is a zone, okay. So that's the difference here. So although the next week is expected to be heavily volatile, okay, or so, and there will be sharp, very sudden and sharp movements, okay, but you need not to worry about this, because if you are my Patreon community member, then you will be very well informed in advance, okay, what will be the support and resistance level, what can hold, okay, what can trigger fall, what can trigger more bullish movement, and you can make changes to your trades accordingly. So you can join my Patreon community. I have given the link in the description of the video and also in the comment section. But guys, if you want to become self-reliant, and if you do not want to take burden of bullish movement, bearish movement, or the sudden these are news or so, and you want to trade on your own terms, you want to make money on your own terms by predicting the movement, okay, with almost 100% accuracy, then you can participate in the program that I mentioned here. So I have given the link to this program in the description of this video and also in the comment section. So guys, hit like if you have liked this video to show your appreciation, and subscribe to my YouTube channel if you have not yet subscribed. And if you have any questions that you want to ask, then you can ask your question through the comment section. So guys, this was my S&P 500 technical analysis for the next week.